Welcome back to the second half of the Futures Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. We've got futures suggesting we'll see a higher open this Wednesday morning. Scott Bauer, the CEO of Prosper Trading Academy, is with us to talk currencies. Scott, good morning to you. So far, we've been focused on this. Good morning. We've been focused on this kind of hint of risk-on sentiment that we're starting to see come back into play today. I'm looking at the U.S. dollar, though. It's one of those safe haven type plays. It's been run up recently to 99.42, and I'm seeing, while it's off about 0.6%, not wholeheartedly buying into the fact or the idea that the worst is behind us.
No, not yet. And that was a pretty massive run up to that 99.5-ish level or so. And we're seeing other currencies, really declining at the expense of the dollar, more so just because of something you guys had just mentioned in that previous interview that you just had there, the emotional or the psychological effect of trading. And the dollar is one of the, it's the risk off asset that people go to, that gold, and that's why we saw that run up. And so this decline that we're seeing today of about 0.5 or 0.6% here, I wouldn't buy into that we're going lower from here.
Yeah, I'd agree. I mean, 0.6% here, significant in many ways. We're back down below 99, but still holding up above the range that we established throughout December, January, and into February prior to the run-up. Now, when I look at the dollar and the rally, again, you tied it to some of the geopolitical tensions, which I completely agree with, especially when you see rates, for example, the TNX, which has basically been parked at or just below 2%. I mean, we're not necessarily getting lift from treasuries, from yields.
No, so that's where some of the offset comes from, because you would think that you would get that, but like you said, the 10-year has been totally range bound for maybe the past 2 weeks or so, and you would see some reflection of that. So this really is just the focus on the dollar. I also think, Ben, that a lot of the rally that we saw in the dollar could have been some short covering. There's apparently a shortage of dollars in the currency markets, so that could have been a bit of what we saw to the upside as well. But again, this little bit of a sell-off here, it's more, I think, just a recovery on some of the other currencies that really, really sold off versus the dollar, more so than a weakening of the dollar, if that makes sense.
It does, Scott, and I completely agree. I always talk about the tail that wags the dog. In this instance, we could be talking the euro currency being the tail. Again, obviously the dollar being the dog. But speaking of some of those other currencies, the euro, we've got the ECB meeting coming up soon, and it's not just tensions, the war on Ukraine, Russia's attack on Ukraine that's weighing on the euro currency, the 6E. I mean, you also have a ECB, which is a lot less hawkish than global central banks across the world.
Absolutely. No question about it. The expectations are that, they are probably going to be pulling in the reins a little bit and maybe not even talk about a rate hike until possibly the end of the year. So, I think the euro is unlikely to make much headway. While there's, the concern about the war in Ukraine, but also what's going on with the euro economy right now. There's growing concern about stagflation, which is causing the ECB to think about delaying any sort of interest rate hike till, later in the year, maybe at the earliest.
We've got the ECB tomorrow. We've got the FOMC on the 16th, and as I look here on the 17th, we've got the Bank of England and a couple others that will report throughout the month of March before we work our way back into April, and look forward to some of the others that we've heard from already. But talk to us in terms of what we should be looking for, because potentially a factor to consider here over the next couple days is not only some of those other foreign currencies, but also you've got CPI, you've got some data due out, consumer inflation numbers. That could be a catalyst for the U.S. dollar as well, one way or the other ultimately.
Absolutely. And the landscape has certainly changed over the last 2 weeks with what's going on in Ukraine. Nonetheless, when you break it down and you still look at the fundamentals, interest rates do need to go up. And people may agree or disagree or say, how can you do that in the face of, everything that's going on right now? But rates do really need to go up to combat, the inflation issues that we're having. It's just a really tenuous ride as to how the FOMC, the ECB, other central banks in the world are going to, pull this one off, given everything that's going on right now.
Scott, talk to me in terms of some of the other numbers due out. It's not just CPI. I'm hearing a lot of focus on the Michigan sentiment data. How much attention do you think that'll get? And for that matter, jolts this morning?
I think JOLTS is important. Sentiment
Okay.
data, I don't think is really too important right now in terms of what the Fed might do. Certainly, the psychology of the market and of the consumer out there, that may have some bearing on that. But in terms of overall market movement and what the Fed is going to do, I think JOLTS is a big number, and obviously CPI tomorrow. But the expectations for CPI are these numbers are going to be so red hot off the charts here. It would have to take a number maybe north of 8.5% to even for the Fed to even consider putting, an accelerated hike or going back to a 50-point hike on the table here, because the expectations are already for what, 7.9 or 8%.
Scott, talk to me in terms of factoring some of these headlines. We were talking at the top of the show about Biden's announcement in terms of the crude oil, Russia embargo on Russian crude oil. And ultimately, we saw markets kind of a limited reaction to. I guess sometimes this makes me think about how some of this oftentimes is priced in ahead of the announcement. And while we were talking about it earlier in terms of commodities, it was kind of buy rumor, sell fact. In terms of the indices, sell rumor, buy fact. And we've seen quite the knee-jerk reaction in terms of, but it sort of speaks to how some of this price or expectations were that we were going to ultimately, and that it was already priced in.
No question about it. And again, I'll go back to your previous conversation here. In trading and in the markets, there's fundamentals, there's technicals, which probably hold 80% of the time. But then there's the psychological and the emotional part of the marketplace that is, 15 to 20% of the time. And that's what we're seeing right now.
We're in the 15 to 20. Yeah,
exactly. Those are the knee-jerk reactions that we're seeing now based on the headlines, based on, the decisions we're seeing coming out of Washington and curbing what's going on in Ukraine and Russia and any embargo. So those are the kind of decisions that you really have to take a step back when the market makes a move off of one of those decisions. Because for the most part, when the dust settles, it usually is a buy the rumor, sell the news type of event.
Scott, talk to me in terms of, we were talking about Bitcoin before we brought you in. Is this what you would expect to see under these conditions as far as Bitcoin recently starting to get a little bit of a lift here? It's coming off the lows as well. I mean, is that an indication of change in sentiment?
I think the move in Bitcoin today is really due more to what Janet Yellen said this morning and what the administration is saying about Bitcoin, which when you break it down, though, they're not really saying much, to be quite honest. They're not changing policy. They're not instituting any sort of policy here. They're basically, though, what they did say is, you know what, cryptocurrency is here to stay, and we are going to regulate it. We are going to do something with it, and we are acknowledging that this is something that is here to stay. So I think that's why you're getting the lift here. I'd be very cautious on any further run up. We're at the area here that we saw, last week here. So I think this is pretty important, the 42.5 area to watch.
Scott, as you say that, one of the things I've been thinking about is the cryptos, the Bitcoiners have been looking for this regulatory measure potentially to kind of provide some of that legitimacy. But ultimately, we've also talked about how, well, this potentially input from the Fed or potentially regulatory measures ultimately could limit Bitcoin. And it could kind of put the lid on cryptocurrencies. So it is going to be key to see how investors and based on the verbiage, how it's interpreted.
No doubt. So you've got both sides there. You've got the bulls, fighting, saying this has been coming for a long time. Yeah. It's legitimate now. And then you've got the opposite side of that saying, okay, what are the limitations going to be? And I think this 42.5 area here is a big inflection point. If it gets through there, Ben, I could easily see 47 or 48, but I'm not so sure that we get through it right now.
Okay, we talked about how this is a key level right now. It does look like we're holding, if we could pull this chart right at the 50-day moving average. Scott, in terms of, we've covered a lot here this morning, and I appreciate you joining us. Is there anything that we haven't focused on here that you have your eye on and you think our viewers should be watching? We've got gold on the move higher. We talked a little bit about rates. Any of the metals that you've had your eye on, or any other commodities that are attracting, raising eyebrows and attracting attention?
Obviously, people are looking at nickel, palladium, with the massive rises, and I would just caution people to again, tame some of that emotion when you see moves like this. Not that the moves can't continue in the same direction. Typically, though, it is that that big fear, that buy the rumor, sell the news type of event. So I would caution. Going back to some of the currencies, though, Ben, when we're looking at some commodity currencies, the Aussie dollar is really interesting to me right here. It is fighting right up against, it has rallied back against the dollar. It is fighting right up against its 200-day moving average at around 73-ish, maybe a little bit higher than that. And if it breaks through there, you could really see a big pop there. So I would watch for that.
We watched the Aussie dollar rally off recent lows around 69.60. We've watched the New Zealand dollar as well. Scott, last but not least, as we head out into break here, I just wanted to get your thoughts. You know, we always talk about how Kevin Hinks, under these circumstances, he likes to dive headfirst into markets like this, these volatile conditions. He says he likes to wrestle tigers. How do you approach these conditions? Do you size back? Do you sideline yourself, or do you get more aggressive under these circumstances?
Kevin and I are made of the same cloth and have a lot of the same experience on the floor. So no, I love diving head first. I think this is opportunity. However, that doesn't mean you go into situations like this looking to hit home runs.
Noted. You've said that before. Singles and doubles are key.
That's a recipe for disaster. So I want to take advantage of these spikes. I want to take advantage of this volatility. I always do it, though, trading completely risk defined. Mm-hmm. This is not a time to sit on the sideline. Mm-hmm. This is a time to be aggressive, but always risk defined.
And in order to do so, again, we're talking about trading options, ultimately, options on futures here. So, again, I think that's good advice under these circumstances, risk-defined approaches towards trying to hit singles and doubles, not necessarily home runs. Scott Bauer, thanks for joining us this morning, this Wednesday, to help us get ahead of what's playing out here in terms of some of the currencies, financial markets. Scott's the CEO of Prosper Trading Academy, and well, we're going to take a quick break. When we come back, my chart of the day, we'll take a look at some of the eco data headed our way. And Mr. Kevin Hinks has a trade for us ahead of the WASD report. It's going to be here later this morning. Lots more futures in just 2 minutes. Stick around. We'll be back.